Hello, everyone. Show. I am Agam Vakil. In this show, we take you through all that is happening in the futures and options space in Indian derivatives markets. But before that, a quick look at the headlines. December joy hits the large street. Nifty sledges back to 21,000. Sensex also joins the Christmas party. And meanwhile, broader markets rhyme with the gains. Nifty mid-cap hits a fresh record high, and small-cap index also gains nearly 1%. And it's another exit coming in from Infosys top management. This time it's CFO Nilanjan Roy who has decided to part ways with the company, making it the 11th top exit in the last 15 months. And it's a century for Areda. Stock surges more than 200% from its IPO price, plays a Navratna for PSU necklace. And it's a large trade for Mankind Pharma, where about 1.45 crore shares or 3.6% equity has changed hands. Stock at the moment trades lower by 3%. Now, those are your top headlines at this hour, but let's take a look at the markets. Now, it's turning out to be another quiet session, but remember, it is the FinNifty expiry, options weekly options expiry. So we're going to be keeping an eye on a handful of these indices going in. That said, as far as the benchmarks are concerned, as flat as be. So the Nifty is still at around 21,000, not too much to speak for. The Bank Nifty marginally in the red, but again, it's been a quiet session. It's turning out to be one. Now, to a certain extent, at least some of the participants are expecting some amount of consolidation after the kind of sharp move we have seen for the benchmarks, which would include the Nifty and the Bank Nifty. The question really is that how long would this consolidation last? Clearly, we are seeing that come through over the past couple of days, and Monday and Tuesday, days of trades, we haven't seen too much to speak for. But very quickly, let's address what's happening with the benchmarks. I'm going to take you through the Nifty specifically and the constituents there, and to take a look at whether or not we have, in fact, seen a lot of traction with respect to a handful of your names there. So speaking of the Nifty, we do have gains, and we do have traction in the likes of something like Dr. Reddy's, where a little bit of reversal coming through. Bajaj Auto, Ultratech Cement, and Hero MotoCorp, all of them up and about in trade. Of course, Adani Ports and Adani Enterprises also lending some support to the gainers. And on the losing end, we have some pressure in BPCL. That is down around 3.7%. Eicher Motors, Coal India, L&T, all of them losing anywhere between 1 to 1.3% in today's day of trade. Moving on, as far as the broader markets are concerned, we are looking at most amount of gains in something like the Nifty Media Index and the Nifty IT Index. Of course, IT is in focus, on not just on account of Infosys, but also because of a handful of your names in the broader markets, which would include something like Persistent Systems, Coforge, in fact, even your large cap names such as Wipro and TCS are also advancing in trade. L&T Technologies is also in focus as it goes ahead and signs a pact with British Petroleum. And of course, that news came in this morning as well. And Infosys, of course, marginally in the red as of now. So not too much to speak for otherwise. With that, we shift focus to what's really happening in the futures and options space. I'll bring out the Nifty snapshot. How is that panning out at the moment? Let's bring that up and take a look. We have very little change in OI, not unlike what we saw yesterday, even as the underlying continues to hover around 21,000 for the second straight day. And as far as the Bank Nifty is concerned, that as well has seen a little bit more increase in open interest, potentially towards longs, but that is yet to be determined because at the moment it is marginally in the red, but it is seeing a little bit more traction in terms of open interest. Along with that, when it comes to your options scenario and how we are seeing your change in open interest, now at the moment, in terms of your open interest distribution, it is still the 21,000 mark, where your calls and puts have the most amount of OI there in terms of strike. And besides that, we're starting to see a little more activity, a little more writing coming through as far as your 21,500 call is concerned. On the lower end, we likely could see a little more support around 20,800, 20,900, but those supports are not very strong, and it's yet to be determined as to should we see a little bit of a correction after this consolidation. Where do we stop? That's something that we still need to determine. But for now, as you can see, in terms of your change in open interest, where we are continuing to see a little more writing around the higher level calls, which will include 21,300, 21,400. So this is as far as your benchmarks are concerned. And on that note, let's see if we can in fact get in our experts for today. So, well, we have Sneha Seth of Angel One, who's joining us on the show at the moment. And we also have Vinay Rajani of HDFC Securities. Good morning to both of you. Thanks for joining in. Sneha, I start with you. Let's just start by taking taking a look at your assessment on the benchmark, Sneha. How are you reading cues on the Nifty? It's been a little bit of a consolidation coming through around 21,000. It's stuck there, it seems. How are you reading this?
Very good morning. Yes, if we see market around it is from last two sessions we have seen that it is hovering around 21,000 mark, and the highest open interest concentration also is seen in the 21,000 strike. Interestingly, despite Nifty trading around those levels, the call options has been continuously adding decent positions. So that is certainly giving as a hint that market may give some profit taking at this levels, or maybe very soon we may see some profit taking, because if we see on the higher side, the call writers are aggressively writing. On the put side, we are not seeing that kind of activity. So at this moment, and considering the overall build up and considering the FI selling in yesterday's session, I think little bit there can be a chance of profit booking. So it would be advisable if someone is holding long, they should look to book their profits a bit, and timely booking profit would be key at this moment, because we may see some consolidation dips towards 20,700, 20,800 can be bought, but at this moment, yes, being light would be important.
Very important point being made out there, considering we are looking at some amount of consolidation after the sharp up move that we've seen. Sneha is suggesting that if you guys are sitting on gains, it would be a prudent way to go ahead and perhaps book some profits. Vinay, I'll get you into the conversation as well. Good morning to you. How are you reading these indices? How would you play these?
Yeah, good morning. So, as discussed, 21,000 has been acting as a strong resistance, and Nifty is not able to close above that level. So, for last 3-4 sessions, consolidation is going on. Looking at the yesterday's derivative data, muted activity was there. Minor long buildup was seen in Nifty and Bank Nifty, not a major one. FI is actually sold in the index future. So, basically, there was a short buildup by the FIs, not a big. The small short buildup was there. Their open interest went up by 5,000 contract, and they sold around 250 crores of quantity in the index. So basically, some sort of consolidation profit booking is going on. But looking at the other data, looking at the put call ratio, which is at the comfortable level, put call ratio in Nifty is still at 1.14, which cannot be considered as a overbought sign. In the history, we saw that in the bull market, this put call ratio go as high as 1.6, 1.7 also, and from that level, we see a major reversals. But that kind of scenario I'm not looking at right now. 1.14 is a very comfortable level, and positional trend remains positive. Looking at the Bank Nifty and Nifty, both are trading above their 5 days exponential moving average. So though that moving average will act as a support, and overall I believe that one should take intraday dips and short-term corrections in the market as a buying opportunity. So positional trend remains up. And the other thing is that FI's long to short ratio in the index future is at comfortable level. They are now net long. 1.31 is the ratio in FI's long to short. So in bull markets, we have seen this ratio going about 2 and also about 3 also. So in that way, FIs have covered their shorts. Now they are net long. But 1.31 is not that high number we can see as per the current bull market. So overall, I believe that any corrections should be taken as a buying opportunity, and Nifty can be bought at lower levels. And overall, positional trend remains up, and the immediate target we can see at 21,200, followed by 21,500. So 20,900, 800 is a strong support where we have seen a put writing.
All right. Well, that's the view coming in, buying on dips. But Sneha, can I take your view on the Bank Nifty? Would you expect that the strength here is also done? And would you mirror your views on the Bank Nifty as compared to what you had already suggested on the Nifty?
See, yes, I would say that we may see some profit booking. It's not that the overall trend will reverse, but yeah, after such a strong move and considering the writing and call options, I would say that yes, in banking index also we can see some dip.
Okay. Vinay, what about you? Any levels that you are watching out for as far as the Bank Nifty is concerned?
So I would be looking for the 47,000 is a strong support and can be utilized as a buying opportunity. So 5 days exponential moving average, which is the nearest moving average we can put on the charts. It is placed around 47,000 in the Bank Nifty spot. So at that level, one can think of going long, and that could be a buying opportunity. So overall trend is up. There is a minor profit booking, sector rotation, stock rotation is going on. But looking at the overall chart, I think if market resumes the uptrend after this consolidation, then Bank Nifty will really outperform, because large cap stocks like ICICI Bank and SBI actually saw a fresh breakout day before yesterday. So overall, I feel that Bank Nifty will outperform, and if market resumes its momentum uptrend after consolidation, then Bank Nifty will outperform.
All right. Well, that's your view coming in as far as the Bank Nifty is concerned. And once again, we're going to have to keep an eye on several of these counters. But since we are talking about Bank Nifty, I also want to pull up what's happening with your frontline names in today's day of trade. So let's pull up HDFC Bank, ICICI Bank, see how that's trading. ICICI Bank is currently marginally in the red. And as far as HDFC goes, that also is as flat as it can be. And coming down to your Axis Bank as well, not too much to speak for. I reckon, yes, so that's also down around 0.4 of percentage point. For now, of course, the reason why some of these names will be in focus, because today is the FinNifty expiry. And because of that, a lot of these names will have some amount of bearing in the FinNifty. The question really is, and while the option premiums in the FinNifty today have already contracted considerably, the question really is that is there scope for some sort of a long volatility, or perhaps a sharp directional strategy coming in. That said, usually it doesn't pan out, and even if it does, you'll have moments where you see these sharp spikes coming through on the FinNifty. Eventually, they dissuade. At least that's what we've usually noticed over the past few expiries. That dissipates, and then eventually you see the Nifty close largely flattish in comparison to where it had opened. And it may have opened higher or lower as compared to the previous session, but it's largely closed around the levels at which it's opened. It's something that we're going to have to wait and watch whether or not that is also the case today as well. But on that note, we're going to slip into a short break, but don't go anywhere. On the other side, we talk about stocks. So we will see you back in just a bit. Welcome back to the FNO show. We put the spotlight on all those stocks which belong to the futures and options space and which are buzzing. I'm going to start by taking a look at all the stocks which are in fact seeing the most amount of increase in open interest in percentage terms. And let's take a look at that. Let's see how things are panning out there. Let's see where there is in fact a lot more accumulation. So we have shorts building up in Canfin Homes and Aisha Motors. That's where we are seeing an increase in OI, where the underlying has come off. And on the other hand, Granules, Z Entertainment and Bandhan Bank are looking at longs building up. Coming down to all the counters which are seeing a decline in open interest, let's pull that up as well. And there you have it. So we have about a short covering for the likes of Apollo Tyres, Coromandel, ONGC and Sun TV, and longs unwinding in Tata Power, even as the underlying there declines by around 1.5%. But, let's also take a look at what our experts have to say about stocks. Vinay, I'll come to you on this one first. Any stocks on your radar that you would like to recommend to our viewers?
Yeah, so the stock which I like as of now is the IRCTC. It is one of the PSU stocks and has recently started performing well, and momentum is getting built on the particular stock. So there is a long consolidation breakout. The previous stock was at 758 and now it is trading at 768. So double top kind of pattern was there around 750, 760 odd level, which is now being taken out, and it is one of the PSU stock. And as we all know that PSU stocks have given fantastic returns, and this index is in continuously into momentum. So I believe IRCTC can extend its rally from here. The pattern is very good technically. So IRCTC December future can be bought at 770. Stop loss in trading can be kept at 753, and upside on the target and immediate resistance, which I see at 805. So this can be played out on the long side with a 2 to 3 days horizon. The second stock which I like is the Persistent System. It is from the IT space, and the IT sector and IT index has been rising for last 3 days, 3 sessions, and IT index has reached to the multi-month high. So recently, looking at the outperformance from the sector as well as the stock has actually given breakout from the consolidation. So Persistent System December future can be bought at 600. Stop loss can be kept at 6,400, and on the upside we can expect a target of 6,800, 6,825 also. So overall, I am bullish on selected PSU stocks and IT stocks like Persistent System.
Okay. Interestingly, Sneha has 2 sells and 1 buy. Sneha, can you take us through your calls for the day?
Yes, I have 2 sell call, which is on the auto space, and 1 buy on Chola Mandalam investment. If you see this counter, I'm talking about Chola Mandalam at this moment. See, this counter has rallied nearly 1%. It had a resistance around 1176 odd levels, and it has surpassed those levels. So I believe we may see a continuation of up move towards at least 1224. So I would recommend buying this counter with a strict stop loss of 1157. Apart from that, I'm for a sell call, I have M&M here. So M&M, if you see, it has given a strong up move, and recently from last 2-3 sessions, we are seeing some short addition. So I recommend selling this counter at current levels with a strict stop loss of around 1675, and the target expected is around 1617. Apart from this, I'm also liking Ashok Leyland for sell again. Here also, I believe the kind of consolidation we have seen and underperformance in this counter, I believe we may see a breakdown below 173, which is a support zone. So I would recommend selling this counter also with a strict stop loss of 178, and the target expected is around 169.
Okay, so some very, very interesting calls coming in as far as both our analysts, experts go from their point of view. And we continue to keep an eye on that. The crucial thing here is that it's a mix of both longs and shorts. And we're going to have to see how these things pan out. But on that note, I'm going to take a moment to thank both our experts for joining us and taking us through their views, Sneha as well as Vinay. And with that, also want to very quickly address with respect to what's happening with the Nifty. Before we in fact get the management of IRIDA, and that should be, in just a minute, want to take a quick look at Nifty. So because it has recovered from day's lows, the question is that where do we go from here, and whether or not we will in fact, see its expiry at this mark. But On that note, I am going to hand it over to my colleague Harsh Sata, who's going to take us through the conversation with the management of IREDA. Harsh, thanks for joining in. The floor is yours.
Well, yes. So thanks so much for that, Agam. And we have the management of IREDA, the stock. Let's quickly take a look at the chart. It's it's buzzing up over 10% in trade today. And that's obviously on the back. It hit upper circuit yesterday as well. So it was on circuit, 20% up yesterday as well. And this is obviously on the back of the fact that they're going into B2C lending. And to break this down a little further, we have Pradeep Kumar Das, who is the chairman and managing director at IREDA with us. Welcome. Good morning. Welcome, sir. Thank you for joining us on NDTV Profit.
Yeah, very good morning, Mr. Harsh.
Right. Sir, so give us context. How, largely the new development is you're getting into B2C lending within the renewable energy space. How large is the market size? How quickly can you grow? Give us some context on that.
Fine, thank you. So, first of all, we are already into. Since more than a year, we have financed to e-rickshaw segment as well as to e-car segment in NCR. And the e-rickshaw, not only NCR, I think in Northeast as well as in Banaras, we have lended to a small NBFC line of credit and around 50 crore. And that they have passed on to, they're already in that business. The range of the rate of interest, what it was charged to the poor rickshawalas, it was in the range of 28 to 34, 36%. This is quite huge. And the rickshawalas, they are not bankable. If you see, they have only two documents with them, that mobile connection and Aadhaar card, by and large. So when this kind of thing is there, any lender, they'll have a concern and challenge. So, but what we did, we came out with an understanding, and the line of credit what we put there, we put a condition that beyond 18 you should not charge. And there's a fair amount of reasonable margin we are having, as well as the small NBFC is having, and fair amount of overhead we have earmarked for them, because retail requires amount of overhead because they have to focus on daily collection from the rickshawalas. The result is it came down to 17.76. So within 18 they have maintained. So coming down from 34, 36 to 18, or even 28 to 18 itself is a huge achievement. So this kind of learning and 1 year of experience now has given us, because we are largely responsible for RE development in the country. We have been doing since 36 years. 25 years we have done single-handedly almost. Now, the plain vanilla RE, so-called wind solar hydro, that is quite established. So other lenders are, other NBFC as well as banks are ready to lend there. Because fair amount of de-risking has been done in that space. But which is emerging and evolving, there again the challenge is there.
Right.
So IREDA by and large, throughout last 36 years, has proven the expertise of transitioning the emerging to established RE and handling the continuously, consistently challenging sector that is renewable energy development.
Right. Right. So thank you for that. Let's try and understand how your loan mix will shift, right? So currently you've said that a very small amount you've lent to B2C through an NBFC. How do you see now your mix shifting now that you've really got your hands onto the B2C yourself? How do you see the mix shifting? You have roughly a sub 50,000 crore book. As it grows, roughly 30 odd % is the growth rate at which you've been growing at. Where do you see loan mix shift, say 2 years from now?
See, our current mix, if you see, 62% is towards the plain vanilla, that is wind solar hydro, and 18% is purely emerging, that is CBG, ethanol, e-mobility, etc. And manufacturing of components, that is with respect to solar and others, we are doing since almost 3 decades, which is not emerging for us. For us, it is established, but for others, it is emerging. Because others are now getting into, because that space is going to grow up 4-fold, 5-fold in the 4-5 years. So in this retail, primarily we are looking at Kusum and rooftop solar. That is having roughly about 1 lakh crores of business size opportunity. See, Kusum is a scheme which is for farmers. farmers are our feeders. They need to be brought into the mainstream, at least giving some pie of the RE development as well as RE contribution in their journey. And agriculture is the largest contributor to our GDP. So we need to be more responsible. And today, our portfolio, if you see, retail, we are having hardly some 50 and odd crores.
Right.
It's a very negligible. But we are successful there. And what retail requires is you need to have digitization and fully automated system and constant and close review monitoring.
Right.
So we have established in last three and a half years how digitally we have grown. We opened a new office 6 months back,
Right.
and the fully digital office, and we have made it a zero paper office, and our 95 to 97% of paper consumption with respect to that office has been reduced.
Sure.
So time to come, we are going to extend. So that means we are technologically improved.
Sure.
We will be improving, and we will be taking handholding and support of small bank, NBFC, as well as banks and other agencies in this pursuit.
Sure. So, sir, again, you've highlighted the market size. If you can quickly tell us where the mix will be 2 to 3 years from now, and also you indicated yields are slightly higher in this segment. What would the typical yields in a PM Kusum be? Because your current yields for, of course, viewer context is roughly 8.5 to 9%. So where would therefore would this actually aid your yields is what I'm trying to understand directionally. So 1 on the mix and 2 on yields, if you can.
See, RE development should be, our RE financing should be looked into dual perspective. One economic driver, one environment contributor. So when we are financing to this space, particularly agriculturists, our yield will keep at a very minimum level, because our portion of the asset portfolio will not be that much, because we have started the retail year back. Now we'll be fully putting it a dedicated division. If required in time to come, we can have a completely different entity. Maybe it is a wholly owned subsidiary or a subsidiary, by jointly getting into this space with others also. See, our objective is to make a fair amount of awareness and bring down the perception, risk perception. The perceived risk should be out. The genuine risk should be captured. That will be our approach to focus. Initially, we will not be enhancing our asset size to larger area. We will be very professionally moving, waiting and watching. Like we waited for a year, we have tested it now, tried, tested, trusted. So now these 3 things will have passed. Now, similarly, when we go for full-fledged retail, you will not go in full-fledged, we'll go in a phased manner by taking line of credits to this. Those local area who's having, those NBFC or bank, those who are having local area strong presence and command, we'll be handling them. And already our team is working on it. We'll be moving very sensibly, because all along we have been 100% government owned. Today we are listed 25% with our investor. We also have to see our investors' sentiment and other things. Quarter on quarter, we have to provide them best quality corporate governance and best quality numbers also. So therefore, we ensure asset quality and best quality corporate governance, digitization and ease of doing business in place, in line with Government of India's mandate to us.
Right. Thank you so much, Mr. Das, for all of that perspective. Of course, IREDA and Focus, 20% up yesterday, 14.5% up today. It's been a stellar listing, especially for shareholders who have held shares through the IPO, or rather got allotment and thereafter continued to hold. Thank you so much, sir, for that perspective.
No, I'll take 1 minute. If you ask me honestly, we are more happy, not because of our share price, because share price may go up, may go down. It all depends on the perception and sentiment in addition to the fundamentals.
Sure.
We are responsible to give the fundamentals. And changing perception, other thing, it is all a very complex thing. But we are quite happy that public by and large is having fair amount of awareness and respect and trust to IREDA and the management of IREDA, as well as MNRE, because MNRE is driving us. So be it Honorable Secretary, be it Honorable Minister, and ultimately head of our governance, Honorable Prime Minister, who are very particular and committed towards RE development.
Sure.
So look at, have the trust and confidence of investing in the era of disinvestment, 1,500 crore in March 22. Right. And then now our new investors, they are also having a trust.
Right.
So now more responsible. We have to be more responsible.
Right.
Okay. That's the management of IREDA talking to us, Harsh. Thank you so much for taking us through that conversation. Of course, we'll continue to keep an eye on that one. A lot of strength there. But on that note, we've completely run out of time on this show. It's a wrap, but don't go anywhere. Lost my lineup. Stay tuned to NDTV Profit.